Well, the derivative market is expected to help Ghana's stock exchange actually shore up when it comes to issues relating to liquidity. Well, arguably, many have said that Ghana does not have a derivative market. But contrary to that, Ghana's cocoa is sold on the futures market, which is a type of a derivative. But if Ghana had a solid stock market that had a derivative market, exactly how was that going to affect our stocks and indeed open up our markets? So far, it's only South African Stock Exchange that has a developed derivative market on it. Kenya has tried several times to implement it, but has not. Issues relating to the law, issues relating to how education should be properly done have been issues why they have done the postponement. It's expected that Ghana should have kick-started its derivative market on the stock exchange, well, this year. Well, we're already in May, and it has not been talked about yet. Today, I'm here with Dr. John Gatsi. He's an economist. He has several hats that I wouldn't want to talk about, but we're going straight into discussion issues relating to the derivative market. John, you're welcome. What is exactly the derivative market?
Well, it's just a market that allows for financial transaction to be traded such a way that the price of the commodity in question could be determined today, but payment will be made in the future, and delivery also takes place in the future. We normally talk of derivative because the transaction itself derives its value and price from another underlying asset. So if you build your transaction on the movement of a particular stock price, so that becomes the underlying asset on which the transaction is derived. We have corn, we have wheat being underlying asset. In fact, this helps a lot, especially in trading commodities. That is why we have a Chicago Board of Trade, which have been in the derivative market for many years. As you rightly indicated, in Africa, we do not have developed market for derivatives. We have a vibrant one on the Johannesburg Stock Exchange. We used to have a commodities exchange in Zimbabwe, especially based on the agriculture produce, but because of the collapse of the agriculture sector, that also collapsed. We had one developed in Ethiopia, one also being developed in Kenya. Ghana also started about 3-4 years ago. We put the law in place, but derivative market, especially commodities exchange, can only thrive effectively when you have other market infrastructure. We have good roads. We have storage facilities that can store the produce that you have actually targeted. But we've not been able to do that, so that is why it is. But if we're talking about Ghana, we may not have a vibrant derivative market, but we have been participating in derivative market. For example, if you look at the cocoa industry, our cocoa is traded basically based on the futures market. Even though if you look at the structure in the cocoa board, they sell part of their cocoa on the derivative market and sell part in the spot market.
Why are we not able to really have a vibrant derivatives market?
Well, I think it's just a matter of commitment and the kind of trade that we engage in. I think we are not targeting very well. We thought that it is just a matter of putting up the law, but you will realize that if you are going to engage in commodities, for example, where are you going to store them? Do we have a very good accredited warehouse system in the country where commodities will be stored before delivery? These are the things that we need to, and then the market itself needs some restructuring. For example, we have what we call a clearinghouse system. The clearinghouse becomes the administrator of all commodities transactions. So we need to put all those things in place, but we've just put in place the law. We didn't put in place the infrastructure. So what is left is commitment.
So what you're saying is that if this infrastructure is not put in place, it does not look like we will be able to start a derivative market vibrantly at the Ghana Stock Exchange this year.
In my opinion, yes. Because if, for example, you want to use corn as one of the commodities to be traded, and you need to use the clearinghouse system, and the clearinghouse is the administrator of all derivative transactions for both long position traders and short position traders. Now, the administrator of the market is the custodian of derivative products. So where are you going to store those produce when the seller delivers to the clearinghouse for onward delivery to the buyer? So all those things ought to be put in place. If you don't do that, you have it on paper, but you cannot implement it. And also, it is not every commodity that we can capture under the system. We must look at it within the context of West Africa. What are those products that are common across the West African region, so that you can have buy-in and participation from our neighboring countries? So those are the things that I think with respect to the commodities.
If you look at our current state, how many years would you give us as a country before we can see the implementation?
Well, it all depends on how the idea is sold out, because you do not need a government to put up this infrastructure. Will you register some people to give them accreditation to have warehouse system that you will be using? So you are involving the private sector to build warehouse silos, storage facilities, especially if you have commodities that may perish over a period of time. So for me, it's just commitment, how you package the whole situation to attract investment from domestic private sector and from international private sector.
Now, from my reading, what I observed was that it's one of the reasons why we had the collapse of the economy when it comes to America. The derivatives market affected the mortgage sector. If we bring it here and there's a problem, do we have integrated systems to absorb ourselves? Could this be one of the reasons why we haven't even explored that opportunity?
Well, there are very complex forms of derivatives, but what we are talking about is just commodities market. It is not the commodities market, which is a form of derivative transaction that actually collapsed the American economy, especially in 2007, 2008. They are financial derivatives, okay, which were not regulated well, which were not monitored well. They beat the instinct of the regulator, and those things happen. In fact, that was not the first time. Enron, before this, part of the problem of Enron was as a result of derivative Parmalat and in Italy, etc. And most technology firms collapsed because of some other reasons. So what it means is that when it comes to financial derivatives, we ought to be very careful. That is why sometimes when people are shouting Ghana should go into into hedging because of small fluctuation in oil prices, we need to be very careful, because there is a regime of price disturbance within which derivative become meaningful. Outside that, hedging, because there is something called derivative, becomes very risky, that you need to be very careful about. But what we are talking about is trying to bring most of our important commodities into the derivative transaction form, so that can enhance agriculture productivity, and how agriculture will become a very vibrant area for private sector participation. Because, you see, the reason why we don't have so much problem in the cocoa sector is because of the derivative transaction. You use the contract that you sign with the financier, with the buyers, to go into the market as a collateral to take syndicated loan. You bring it to pay or discuss with farmers about what you call the producer price, and that encourages them to go producing. So it is also proper, if you have a commodities market or commodities exchange in Ghana, where farmers of our vegetables, etc., are aware that they can sign an off-taker agreement with a buyer. And based on that agreement, they can now go to the financial institution that they can take facilities to engage in proper, farming. But that is not in existence. So that is why the private sector investment in agriculture is limited, and we have been crying about, because government cannot do that kind of investment in the agriculture value chain.
Well, you have indicated that the agri sector could be one of the biggest benefactors if we had a developed derivative market. In conclusion, how would you say that a solid derivative market can affect the economy of Ghana?
Well, the point I want to establish is that if you get to the financial system, the reason why facilities from the financial institutions to agriculture is limited is not because people don't have ability to produce, it's because of market. So market is where the main risk is found. So if you are able to structure this based on derivative contract, where people can enter into contract in terms of production and pricing before farming season, and they document that, then there is a ready market. So there are risks related to market for which financial institutions are not willing to actually extend credit to agriculture sector is taken away. So you solve a very huge problem. So that is where I think that it's going to be very important to focus on that, to take away part of the risk that the financial system continue to talk about, and we can also have a vibrant, productive sector that will create jobs and that will change our economy.
So what you're saying is that this could go a longer way to help the sector than even the so-called agric insurance that has been introduced?
Yeah, I think so. Because, you see, we have various segments of agriculture in this country. But when we talk about agriculture, we are just talking about our people in our villages going to farm. Most of these people are subsistence farmers. If they have extra, they sell, and that ends it. But we want people who will take agriculture as their business, agriculture as their investment. And these people need a platform like this to be able to have a flow of capital to do that. If we are not able to do that, these people who should take agriculture like a big business will not have that opportunity.
Well, I did the discussion together with John Gatsi. In conclusion, if Ghana's financial organizations can really invest in the agric sector, a great derivative market would actually be a boost and an area of confidence for these financial institutions to invest in the sector. Well, my name is Odelia Ntiamoah. Let's meet next week as we discuss further issues on Business Trends Africa.